The US imposed tariffs on Canada's natural gas to push Canada to export its gas to Europe during a difficult time when Europe needed it most. Europe's energy needs have been changing rapidly in recent years. For a long time, Europe relied heavily on Russian gas pipelines and US liquefied natural gas, LNG, to meet its energy demands. This system worked well until prices began to rise, and political tensions along with supply chain issues made it difficult to depend on these sources. The situation became even more challenging when Europe faced a major energy crisis, with gas prices skyrocketing and shortages becoming common. This crisis was worsened by extreme weather conditions, such as very dry summers and cold winters, which made it harder to produce and store energy. As a result, Europe was forced to rethink its energy strategy and explore new ways to secure its energy supply. To address these challenges, Europe introduced an ambitious plan called REPowerEU. This initiative aims to reduce Europe's reliance on Russian gas, diversify energy suppliers, and accelerate the transition to cleaner energy sources such as wind and solar power. The ultimate goal is to create a more sustainable and resilient energy system that is less susceptible to external disruptions. However, transitioning to renewable energy is a long-term process, and in the short term, Europe still requires stable and reliable energy sources to meet its immediate needs. This is where countries like Canada play a crucial role. Canada has emerged as a promising new supplier of liquefied natural gas, LNG, for Europe. With vast natural gas reserves and a politically stable environment, Canada offers a safe and dependable alternative to traditional suppliers like Russia and the US. One of Canada's flagship LNG projects, LNG Canada, is poised to become a major player in the global LNG market. Once operational, this project will enable Canada to export significant volumes of natural gas to countries around the world, including those in Europe, helping to address the continent's energy demands during this critical transition period. Recent deals, such as the one between Trafigura, a global trading company, and a Canadian LNG producer, demonstrate the growing interest in Canadian LNG. These agreements underscore Canada's potential to emerge as a key player in the global energy market. One of Canada's standout advantages over other LNG suppliers is its strategic geographic location. Canada can efficiently ship LNG to both Europe and Asia at relatively low costs. For Europe, LNG can be transported across the Atlantic Ocean, while for Asia, it can be shipped across the Pacific. This flexibility enables Canada to offer new, reliable trade routes that bypass older, riskier ones, making it an appealing option for countries seeking to diversify their energy sources. For instance, during the energy crisis, Europe urgently needed access to LNG, and Canada's ability to meet this demand quickly proved to be a significant advantage. However, Canada is not the only country vying to capitalize on the rising global demand for LNG. The US, which has been the world's largest LNG exporter for several years, now faces growing competition from Canada and other nations, such as Mexico, as the race to secure a share of the lucrative LNG market intensifies. The US LNG industry is facing uncertainties, including potential tariffs and shifting government regulations, which have made Canada a more attractive option for some buyers. Meanwhile, countries like Mexico are making significant investments in developing their own LNG export facilities, further intensifying competition. This growing rivalry is driving LNG suppliers to accelerate their efforts and offer more competitive deals to secure buyers. For Europe, the shift toward Canadian LNG is part of a broader strategy to create a more flexible and secure energy system. The continent is investing heavily in upgrading its infrastructure to accommodate LNG imports from new suppliers. This includes expanding storage facilities and pipelines to ensure efficient transportation and storage of LNG. Additionally, Europe is seeking flexible contracts that allow it to purchase LNG on demand, avoiding long-term commitments. This approach provides Europe with greater control over its energy supply and minimizes the risk of future shortages. Despite its potential, Canada still faces several challenges in becoming a leading LNG supplier. One of the biggest obstacles is navigating the complex permitting process and adhering to stringent environmental regulations. Building the necessary infrastructure for LNG exports, such as pipelines and export terminals, is also a costly and time-consuming endeavor. Overcoming these challenges is essential for Canada to fully leverage its abundant natural gas resources and solidify its position as a reliable and competitive LNG supplier in the global market. Another critical issue is the environmental impact of LNG. While LNG is considered a cleaner alternative to coal and oil, it still produces carbon emissions. Some experts worry that heavy investments in LNG infrastructure could slow the transition to fully clean energy sources like wind and solar. Environmental groups have also raised concerns, arguing that as Europe ramps up its renewable energy production, it may not need as much LNG in the future. They believe Canada should prioritize developing clean energy at home rather than expanding its LNG exports. Looking ahead, the relationship between Europe and Canada in the LNG market is likely to be a long-term one. For Europe, signing deals with Canada isn't just about addressing current energy needs. It's about building a more diverse and reliable energy system for the future. Future agreements might even combine LNG exports with investments in renewable energy projects, creating a more balanced approach to energy supply. Canada's LNG projects are expected to open up two major shipping routes, one to Asia across the Pacific and another to Europe across the Atlantic. These new routes could spur investments in ports and transportation infrastructure worldwide, further boosting global trade. The economic benefits of Canada becoming a major LNG supplier are substantial. For Canada, the LNG industry could create thousands of jobs and attract billions of dollars in investments, strengthening the country's economy. At the same time, increased competition in the LNG market could help lower prices for European countries, making energy more affordable and improving energy security. This would be especially important for nations still heavily reliant on fossil fuels and seeking cleaner alternatives to coal and oil. Thanks for watching. If you found this video insightful, don't forget to give it a thumbs up and subscribe to our channel for more in-depth analyses on global energy trends. Let us know in the comments what you think about Canada's role in the LNG market and its impact on Europe's energy future. Stay tuned for more updates, and we'll see you in the next video.